Good morning everybody, welcome back to cilinixfxcapital. Hope you're all doing great. Welcome to this new video right here on Bitcoin. We're going to do a full update. We'll talk about some technicals, we'll talk about the fundamentals briefly, but technicals at this point of time I think are most likely, especially given where Bitcoin is at this point of time. Now, first of all, what you should know before we talk about anything is that today it's Independence Day. So first of all, if you're watching from the USA, happy 4th of July. But second of all, that also means that the markets are closed. All right, so that means that we're going to get, you can see it right here, but that means that we're going to get into a long weekend here from Friday into Monday. And this is just a, look, for Bitcoin will probably be fine, right? I mean, Bitcoin right now, the 24-hour volume is around $50 billion. That's still very, very high, and I don't have order book depth here, but the order book depth is most likely still fine as well, right? So that's liquidity. However, what you should know is that what happens is that market makers, traders, whales, usually in periods of times like these are going to pull some of the liquidity from order books, potentially also going to pull some liquidity from AMMs, but that's less relevant for most of us. And that makes markets more volatile, right? So that is something you need to be aware of, that this is, like, these days will very much be a time where fake outs and just in general spikes will be more common. All right, so let's get right into the analysis. So first of all, the fundamentals are still quite good. I mean, the S&P 500 has pulled back a little bit overnight. That's not the end of the world. That's normal. I mean, it is still in an uptrend, so as long as it is in an uptrend, I see no reason to be worried about that. And ultimately, that it is in an uptrend is also still bullish for Bitcoin. However, Bitcoin is pulling back right here, and what you can see is that that we're pulling back into that level we failed to hold so far. At least we failed to hold the 1 hour uptrend. That's not bad. What I said in my videos is that, you know, the main level that needs to hold is 108,000, and that is also by far the most crucial level we need to keep an eye on, because 108,000, as you can see right here as well, was the main resistance level that we had when we were ranging right there between 108 and 106.5. So what we did on Wednesday is we broke out of that resistance level. We did so with quite a lot of volume and times were great. But now we do need to hold that level, not only because it is the top of the resistance of the range that we broke above, but we also have the 7-day rolling VWAP there. On the 1 hour time frame, we have the 200 EMA there. On the 4 hour time frame, we have the 4 hour trend there. And we also have a fair value gap. So in terms of confluences, in terms of support indicators, we have a lot there. All right, so therefore I would also say that I think it's most likely that we are going to be able to hold that, right? And by the way, the open of today was also in line with that, right? So we opened within yesterday's value area, which is usually a sign that we are going to remain relatively stable over the entire day, right? So intraday you can have some volatility, but ultimately it's most likely we'll get back to that stability. And then outside of that, I mean, I don't look, I'm a little bit double in this. I think technically and I think fundamentally it's most likely that we might touch that level, but that we will revert back up, right, for the reasons I've given you in the last 2 minutes. However, something I am slightly worried about, and that's also something I spoke about in our premium group this morning, is the fact that what we have seen over the course of this week is that we broke out of a balance that held from the 25th of June until, well, let's say the 2nd of July. So for a good week, we broke out of that, and then the reaction and the strength that we had was a move of about 2% higher. Look, that's not very strong. All right, and that in combination with being at a massive resistance level, and, you know, the fundamentals not being bad, but the fundamentals also not being that great, that we could rally up higher, that worries me a little bit, right? So I do think you need to be slightly cautious, and you know, at this moment I certainly do still expect a move up higher, but it is very much based on how much strength we can get from this level right here between 108.5 and 108. If we do not get a lot of strength from there, if we're unable to reclaim a minor level like 108.8 after hitting those levels, then I can very, very quickly shift my bias towards being a little bit more bearish. But I'll keep you updated on that. For now, I think that's what you need to know regarding the markets. So hopefully that helps. But for now, thank you for watching. Take care and bye.